for joining us. Really excited to have everyone in the room and online. Thank you for taking time out of your day. The new year just started, and this is a great way to start your year by learning new tools and really helping set your business up for success in this year. So kudos to you. If you haven't seen the bingo card we created for 2026, definitely grab one. You can probably mark off a couple boxes on your financial entrepreneurship bingo. If you're not familiar with CIC, we are a financial empowerment nonprofit. We focus in the areas of education, homeownership, and entrepreneurship. And within our entrepreneurship bucket, we provide support to entrepreneurs through both access to capital and financial education, which is what we're doing here today. I wanted to share the why behind why we created this class. We meet with hundreds of businesses every year. Many are reaching out because they're interested in obtaining financing or they're curious what goes into the process. And what we find is that many businesses do not have financial systems in place, or they're not keeping them up to date. So not everything in the world revolves around loans. That's definitely not our goal today. But if you do think you may want financing at some point, or if maybe you want to sell your business, or maybe you would like a partner at one point, or an investor, you're going to need to be able to provide financial information on your business. And you do that through financial records. And so it's important that you have consistent, regular financial records to provide when you need them. It's a lot harder to go back and rebuild than it is to keep things up to date, right? Like our memory fades and we don't necessarily remember all the details. We all started a business for a reason, right? We want to create a better lives for ourselves. We see a gap in the community. Maybe there's specific financial goals we're wanting to achieve, but those goals don't achieve themselves, right? It requires work and dedication, and we need to keep an eye on our finances if we want to achieve those goals. So our numbers are a powerful tool. I know numbers can be uncomfortable. Not everyone loves finance. I'm in finance because I love finance. I didn't start a business doing something non-financial, right? Like this is where my expertise is, and I understand that that not everyone is as comfortable there. So I encourage you to start. This class today is a perfect place. Start at a basic level, understand what your numbers are telling you, build some simple tools, and as you gain comfort, you can grow your skills. You can hire an accountant, a bookkeeper, whatever. You can do that yourself, but it doesn't all have to be at one time. It can happen slowly over time. And lastly, before we get started, I just wanted to leave you with a couple questions to consider. I'll give you just a second to ponder these. You don't have to answer them, but why did you start your business? What is your why? What are you trying to achieve for yourself? Are you making progress towards those goals? What's your next step in towards moving towards your goal? And where do finances fit into that? We will share a copy of these slides after the presentation, so you can think about these after the fact as well. All right, Melissa and I are going to tag team this presentation today. Do you want me to give my background?
Oh, yeah, go for it. I guess we did do that.
We didn't practice this part.
Yeah.
So for those of you not in the room, my name is Caroline Nelson. I'm the Chief Operating Officer here at CIC. I also head up our lending department, and I'm joined by Malisa Evans. And we're going to be co-presenting today. So I have the lending expertise. I'm looking at financials all day, every day. I'm working with business owners to prepare their financials, making decisions from this side. Melissa views it from a different lens. So I'm hoping that we will be able to answer a lot of your questions and really present you with some different viewpoints that complement each other.
Perfect. Thank you, Caroline. Yeah, as Caroline said, I'm looking more at it from like the bookkeeping side of things, like QuickBooks, and kind of when we look at people's books, what do we see and what are some errors that are found, but that can be easily corrected, especially in the beginning or at any point. So that's kind of where we're coming from. And like Caroline said, hopefully the two sides will mesh into a perfect story for you. As we go through this class, our goals for you are to help you move beyond your bank balance as the primary tool for your business management, to understand key sections of the financial statements. And I know that might be what, but we really want to kind of look at what are the important parts and how do we break it down. We want to be able to help you learn how to organize your data so that you can get information on your revenue, your expenses, your cash, and your credit. And at the end of the day, we always want to know what money comes in, what money comes out, and understand your personal investment in your business. And I think that's going to be important because you should know what you've put in your business and kind of see that through. So let's start with banking and just dive right in to see where we're at. So as I said, most people, when you start your business, you're starting as an LLC and you're putting your own personal money into this business to start it, whether it's you buying things that you need to make something, or you're using your money to find a place to rent, or whatever it can have. It's your money that you're putting in to the business. And so whenever we look at a small business, there are two things that we try to help, that we want people to try to do. And the first item is to have a separate business bank account. So it doesn't need to be an actual business account through the bank. It just needs to be an account that you are designating for your business transactions. So you can have two accounts, one for your personal things and one for your business. And what we ask that you try to do is you use that business bank account to pay for bills, to accept payments from your customers. And so what this will do, this will help separate your personal transactions from your business transactions. And it'll help prevent any errors on your financial statements. You'll be able to see what money did come in for my business. How much money did I actually make for my business? That $200 from my friend Maggie on Zelle, that's not income for my business. That was just her paying me back for the movie tickets, or not movie, concert tickets. So that'd be an expensive movie. It also gives you a clear picture of your cash flow. So when you're looking at your business bank account and you're seeing that you have cash flow, sorry, I'm like skipping things, I'm being so excited here. When you're looking at a mixed bank account and you're seeing money come in and out, you don't really know where your business is at, right? If you have another job, like some people have, they keep their personal job or they're getting a W-2, but they're also starting their business at the same time, and you're getting income from your employer, right? It's hard to see where you're at when you have one account with money coming in from your employer, but also money coming in from your customers for your new business. It's hard to track all that. So it's really nice to have a separate account for that. And if you have a separate account, then you can log in the morning, not every morning, but you can log in, however often you feel comfortable with, and see what is your balance in your business bank account. Let's say you have 10,000, right? And then you look and you say, okay, here are all the bills that I need to pay for my business. These are all the expenses. I need to pay for these materials I bought. I need to pay for these pop-ups I'm going to attend, whatever those expenses are. And then you can say, okay, 10,000 minus those expenses. And then you know where you're at. You know where your business is at. Do you have revenue? Do you have extra money to invest in something or to pay yourself back for what you invested in the business? Or do you need to make another investment into your business? Are you not making money and you need to make a contribution, an owner's contribution to the business to help the business pay for the expenses? And it's good to know that. It's good to know that every month I'm having to give something or I'm not, right? And then you'll know which months were good for you and which months were not good for the business and why. Then you can go even deeper if people are ready. Why was October such a great month? Was October a great month because I did A, B, and C? Or was it a great month because those events were great, right? So there's a lot of things that you can get from all of that. It'll also help you create reports, especially if you don't have an accounting software. Accounting softwares are expensive, and even though all the commercials say super easy to use, user-friendly tutorials, they are still complicated, and it's really easy to get lost in this software. So by just separating your business bank account, it'll help you get started with figuring out how to get some reports going. And then you can also identify if you're missing some payments. So, let's say you went to a pop-up and you were supposed to get paid for that, and you haven't received that payment from whatever payment app you're using. Now you're going to know, you're going to see it, right? It's now been 2 days. Why didn't I see that deposit come in? You may not see that when you're looking at a mixed account where there's a lot more movement back and forth in and out from that account. So so we really, really push that you use one account, one bank account for your business and separate it from your personal. And I'm not even touching the fact if you have a partner that's sharing that account, that's going to really, can add a lot of complexity to it. And another thing to kind of think about that we're going to circle back to in a few minutes is not all of the deposits in your bank account are going to be revenue. So just kind of think about that and have that stored for later. And then the last thing I think we all need to be aware of is when you have a separate bank account and, the ones that you're dealing with your apps and all of that fun stuff for your business, they are more likely to be targeted for fraudulent activity. So it's really good for you to be able to see what's happening, what's coming in, what's coming out. And on this, oops, what did I do? There we go. And on the same note, I kind of went through all that again. My apologies. All right, here we are. And then on the same note, we would advise that you have a separate credit card for your business. You have one credit card that you're using for all of your personal things. And then if you already have 2 credit cards, use one of them for your business. You don't have to open a new credit card. You can just use one for your personal transactions and one for your business transactions. Again, it's all about keeping things separate. What are you spending on that credit card that you're using for business? That'll track all of that for you. You don't have to go through your credit card statement and say, well, this was for my business. This was me just going to Target to get groceries for myself. This Target, I went and got pencils for the pop-up, right? It's easier to keep track of things if we just keep them separate. And if we keep things separate, your financial statements will be clear, easy to create, and less likely to have any errors. So the next question we're going to ask is, how do you receive payments? In this world that we're in, I'm sure everyone always accepts cash. That's always something that people rarely say no to. Checks probably are not as prevalent anymore. And I think most people may be using the payment apps, and there's so many out there. Yeah. So many out there. Zelle, Apple Pay, Venmo, PayPal, others. Which ones are you using? And then are you accepting credit cards? Right? Are you accepting credit cards through your bank, through an app like Square, Shopify, or Stripe? How are you collecting money from your customers? And so if you could just write this down for yourself, because sometimes it's good to look at all of these, because sometimes we find small businesses will use all of the payment apps because they want to be able to accept money from everybody. And I get that. And it's really helpful to be able to say, yes, I'll take your Apple Pay and I'll take Venmo and PayPal. But I think sometimes when you're writing it all down, you can see how many you're using. And it's good to review how often are you using all of them. Are customers really using PayPal? Or did you only have one PayPal transaction in the past 2 months? And the only reason why I ask that is because all of them come with a fee, right? In order to do what you need to do as a business on these apps, they're going to charge you a fee, except for maybe Zelle. Maybe won't, I don't know exactly on that one. But you also don't want to lose income, right? Because you're paying a fee for Apple Pay, Venmo, PayPal. It's good to review what are they all charging you as a business. I know if you're doing it as a personal transaction, right? A lot of them don't have fees, but once you put it in as a business, you're going to start accruing fees for those. So it is good to kind of review and look at that. And on the same note, how are you spending money and paying for your business expenses? Maybe this is where you're paying most of your expenses through check because you want to have a paper trail for that. Maybe you're setting up ACH payments through your business bank account. Or maybe you're paying your expenses through your business credit card, right? Again, if we're doing this, we should be using that business bank account and that business credit card to help keep things straight. And then maybe you're paying for some things through the payment apps that you're accepting money through. I mean, who knows? I've seen it all happen. So I've paid for a Christmas tree through Venmo, so I know that it's happening out there. So I don't know if those are mine. Can you throw in the chat what is the top 2 ways that you receive payments, and what is the top way that you pay for your expenses? And then we can all see. And then maybe Alexa, are you willing to share?
Oh yeah, of course. Oh, and I totally agree with the fees.
I will say, as everyone's thinking of that and adding to the chat, we live in a complicated world, and it gets more complicated by the day. And the financial system in particular continues to increase in complexity. And so you as the business owner get to decide how much complexity you want in your life. As we'll go through today, we're going to talk about the different reports you should be preparing and what you should do with all of the data. And if you're using 10 different apps to process your transactions, your work is going to be a lot harder. And so you do actually need to be pulling the data out of all of these apps. And so just think about that, as you make your list and as you think about, you reflect back on this class. Do you need to have all of this in your life, or is there a way that you can make your life a little bit simpler?
Okay, so Rosie says she receives mainly on Zelle. Okay, great. And so again, I'm hoping that's going into a separate bank account. If not, that's something we can work on. And then paying with ACH or credit card. All right, so it seems like, oh, look at that. Even if it's not, she's telling me.
Gold star, Rosie.
Yeah, gold star. Perfect. Give a minute for the others to chime in. And while they're doing that, do you want to share?
Yes.
Alexa?
So I received Cash, Zelle, Apple Pay, Venmo, and Cash App. And I signed up when I first started through Venmo, like the business, and they already automatically take like a 3% interest. And I started seeing that they started taking an additional interest when I transferred it to my bank. So I limited that for sure.
Good job. Nice.
Yeah. For my payment apps, I usually do my debit card or pay directly through direct deposit for whatever I have to pay. And then I track my expenses through my bookkeeper or highlight my statements.
Perfect.
But Venmo was like the one that got me the most. It like was double interest, even though it was a business. So that's what I thought was really weird.
Yeah. Yeah. I could go down a whole lot of rabbit holes right now, which I'm not going to, but I just want to caution too, a lot of these systems now, when you're accepting payments through them, they're offering loans. It's like an advance on your sales, and they're real simple. They just show up in your inbox and they're like, take this money. And so we're starting to see a lot of people get into trouble because these transactions are expensive and they're so easy to get, and they don't function like a loan. It's completely different. So I'm happy to have a one-off conversation if you want to learn more about those after the fact, but I do just want to caution you that this is something we're starting to see a lot of, and we're starting to see a lot of businesses kind of get stuck in this cycle of debt, specifically with their card transactions.
All right, so I think I'm handing it back to you, Caroline.
Thanks, Alyssa.
Yeah, I'll turn that off. She wants that up.
All right, so there's 3 questions we'd like to review with you. And so we're going to break these down, but it's going to be, how do you know your end of period profit? Where do your bank transfers come into play? And where does your bank balance come into play? So the first one is, how do you know your end of period profit? Does anyone have an idea? You're interested in sharing? Maybe I'll give you the answer. So our profit refers to how much we make. So our sales minus our expenses, how much it costs to create our product, to run our business, and that is our profit. So when someone says to you, are you profitable? They're not referring to your sales. Do you have customers? Is anyone buying your product? They're actually referring to, are your sales greater than your expenses? And if the answer to that is yes, you're making a profit. If the answer to that is no, you're taking a loss. So at the end of the day, what really all of this comes down to is organization. Through banking, we can identify all of our revenue, and we're using banking kind of largely, as we talked about on the previous slide. There's a lot of different tools that have all of this information. So our bank accounts, well, here we go. Cash, there's no record of, like, electronic record. So if you are accepting cash, you want to write down all of the cash that you receive, where that came from, when you received it, what service it was for. Checks, payment apps, credit card companies, all of those different tools, you can identify your sales, your revenue, and then your expenses. So how much you're spending, all of those same tools again will have that information on there for you. And so what we're going to talk about today is actually looking at these statements, figuring out how to categorize things, how to break them down, and how to determine if we're making money or if we're losing money. So where do bank transfers come into play? Bank transfers are not revenue. So one of the challenges when you are not preparing financial statements is you don't actually know how much money your business is making. When you look at your bank account balance, that just tells you how much money you have in your account at that moment. It doesn't tell you if your business is profitable. It doesn't tell you if you're making more money than you're spending. It's not telling you how much money your business has to spend. It's telling you how much money you have in your account at that moment. So we see a lot of businesses operating out of their bank account. And so this is the next level. So now that we've established a bank account, we're keeping separate records. Now we want to learn how to start tracking this. When you transfer money into your account, so if you have a personal account and a business account, you transfer money into your business account, that is an owner's contribution. That's not income to the business. When you transfer money out of your business account to your personal account, or you spend money for a personal expense, like say you pay your mortgage payment out of your business account for your personal house, right? That's an owner's draw. So these ins and these outs get backed out of your balances, essentially, right, when we start breaking down the data. But it's fairly often when we're looking at like loan applications and we're looking at all the financial data, we see a lot of transfers back and forth between business and personal accounts. And it can be really deceiving because you don't actually know how much money is there. So hopefully today we can talk about some new habits to put into place and how to make things a little cleaner and a little easier for you.
And I would just say really quick is a quick, easy way is to create a spreadsheet, right? And track what day was it that you made an owner's contribution, and then put a date of when you did an owner's draw. And then you can just see right there, where are you at as an investor in your business, right? Have you given more or have you actually received more back because your business is doing well? It's, you can just add it up and you'll do 1,000 in, right? I invested 1,000 and then we did really well and I paid myself 2,000 back. So you've made 1,000, right? So you can see where your owner's contribution and draw are coming together. But that's just a separate spreadsheet that you can kind of just do on your own if you're not using an accounting software where you're setting those accounts up. Mm-hmm. Sorry, just
no, thank you. Now it's great.
I love Excel, so I just
Melissa and I just have so much we want to share, so both of us are like But wait, there's more. So where does your bank balance come into play? I guess I got a little ahead of myself already. Your bank balance, it's organization. It's a piece of the puzzle. It does not determine your revenue. It guides you for cash flow. Do I have enough money in this moment to pay my employees, to pay for inventory, to pay myself? Wait. Oh, the end. Yeah, so that's all. Our bank balance is just a piece of our financial picture. It's not the whole picture. So as we've said, I've mentioned several times, organization is key. All of the money that we earn and that we spend runs through our bank account, our credit cards, all of the financial systems that we use, but they don't give us the details. They don't know our entire financial picture. It's our responsibility to pull together those details. And in the end, it's all in the details.
That was quick. It's already back to me.
There you go. Now it's back to Melissa.
Okay, perfect. So we're going to start with revenue, because at the end of the day, no matter what your goal was, I feel like at the end, we all want to make money, right? And we need to make money in order to keep our business thriving. So we've already talked about how are you collecting money, but now we want to look at what are your actual sales, right? Let's look at that. So when you're setting up your books or your spreadsheet or your accounting software, or you're working with an accountant, which is fine too. Even if you're working with an accountant, you need to have that conversation with the accountant on how you want your books set up, right? And so when you're doing that, you need to think about how do you want to track sales and what do you need to know as a business owner, okay? And so when you track sales, okay, there are 3 ways you can do that. Okay, the first way is to track by type of item. So retail stores, restaurants, and manufacturers want to track this way. So like a retail store wants to track how many sales am I making off of women's clothing versus women's shoes, women's jewelry, men's clothing, men's shoes, right? They want to know which item is doing well. If we don't have any men's sales, then maybe we shouldn't be selling men's items, right? And those are things that you're going to learn from tracking that way. Another way to track is through method of delivery. So am I making more money off of online sales or from farmers markets, right? If I'm not making that much at a farmer's market, then maybe I should focus more on my online sales and make sure my website is up to date or gets, reaches more people. And so a baker or a wholesaler might want to use that method. And then the third way to track is by an employee. So I don't know how many in this meeting have employees, but just to think future, if you're not there yet, if bookkeeping, IT companies, landscapers, they might want to track by employee. How much in business is each employee bringing in? And then if you really want to know for each employee, you can then track by item. So for instance, if I have a bookkeeper named Sally who's working for me, and I want to track how she's doing versus Paul, but I also want to know, what is Sally making more business on? Is she making more business by doing end of the month books? Is she making more business by doing the end of the year paperwork? Those are all different items for a bookkeeper to think about. So you can do that. But my biggest thing to warn you is to start off simple. Okay, think of bigger chunks. Start off simple, because the more detailed you get, the more work it's going to be, number one, to track. And it almost might be too much information for you. And it might be overwhelming and you won't know where to go from there. So just keep it simple and get the main pieces of information that you want and need to help your business grow. So take that time right now and think about your sales and think about which way, if you've already been doing this, are you tracking your sales? Which method? Are you tracking by type of item, method of delivery, employee? And is that working for you, or do you need more detail? Like, Callie, you've been doing this for 10 years. So you might have this set up, but maybe you want to add an element now to see a little bit more detail about how your business is doing. I'm not saying you have to, but you know, when you've done it for that many years, I feel like you might be at that stage where you're ready to get a little bit deeper in that. So just jot down on your notes which one you think is best for you right now, or that you've been using and maybe you want to switch. I don't know. Just kind of write that down. And we're not going to check your paper, obviously, but we do want you to look at that question. All right, so with that, we want to get an accurate breakdown for the sale, okay? So let me start off by saying, when you look at the amount you got paid or the amount that was deposited into your business account, we need to look at that and remember that that is not all revenue, right? That is a summary of that deposit, okay? In that deposit, you do have the amount that was paid for the item or service sold, but you also can have sales tax involved in that. So that's added to that amount, right? You can also have other fees that were taken out from the app you were using. They took a fee out of there. So they subtracted 3% or 6%, depending on what you're using. There could be a delivery fee that's in that deposit. And then somebody could have given you a tip for doing a great job. That could be in there. And so revenue tracking, the item setup is key. So when you're looking at your books and you're working with an accountant or you're trying to make a spreadsheet, these are items that you want set up. You want to set up an account for sales tax, for fees from your apps, a delivery fee, tips, things like that. You want to track it so that way you take it out from that deposit so you know your true revenue for that deposit. And the best way to do that is to use a POS or a point of sale system, okay? And once again, we're going to give you this PowerPoint, but we encourage you to go to this website, these websites, and look at these articles. The first one is an article on the best free POS systems of this year, this month. It updates every January, which is nice. And these are free ones that are out there. And so it also will start showing you the ones that are not free and what their fees are. So you can kind of look at that. And then the second one are, they still have, you know, I know a lot of people are just using the adapter for their phones to run credit cards, but they do still have cash registers for small businesses. And as your business grows, you may have to invest in that. And so that second article kind of gives you a rundown of where they're at. So what is the benefit of a POS? Why would we want to use a POS system, right? I like what I'm doing. I'm doing it. Well, the POS system will give you a report, right? They'll give you a report of what your sales were. They're going to give you a report of what the fees they charged were. They'll separate the sales tax. It usually will give you a report in a spreadsheet, and then it'll give you a category, which will separate it for you and help you enter it into your books. And when you set up your reports and your books, you want it to match your method of categorizing sales. Okay, so think about the items, right? So when you're looking at creating a POS report, you can set up that report where it says, okay, go back to the retail, right? We can set it up where it says the items I'm selling are women's clothing, women's shoes, men's clothing, men's shoes, so that when you're entering that in your POS system, it's going to categorize it for you. It's going to do some of that legwork for you. And then your books will be set up the same way. And so then you can see what's happening, right? We're setting it up the same way and everything we're using to keep things nice and even. I will say, when you're looking at your point of sales, do look to see what the pros and cons are, because this last part, we want it to be able to pull reports and we want to be able to manipulate the reports. and some do not. Or some are really hard to find and figure out, just from what I've seen. It's crazy how they're not as intuitive as you would think they would be. So please take a look at that. One other little warning I would do is, if you're using an accounting software and don't have an accountant, be very careful importing those reports into your QuickBooks or accounting software, because if everything is not set up correctly with the same sales items, or the payment report is not recognizing it the same way you would recognize it, it's going to import it and put it in a whole different account, and then you won't know where it's at or what it's doing. So I would first start by entering it monthly, and then do a small import to see what it's doing before you start doing that every month. We were working with the client who was importing and had imported for 6 months, and it was not set up properly, and it was a huge mess. It was easier to just start from ground zero than to fix it. So I would warn you on that. Are there any questions so far on sale items and POS? Okay, I give the teacher 3 seconds. All right. So the next idea I want to talk to you about in revenue tracking is, I want to talk about the difference between a sales receipt and an invoice. Okay. You hear those words thrown out often, and it's really important to know the difference between them. A sales receipt is for a sale on the spot. And, I feel like most small businesses will start off using sales receipts. And they're probably the easiest to use. However, there are businesses that need to use invoices, right? So they're doing a job, and then they're going to invoice them for it, right? And maybe they're doing that because they're tracking by employee, and the employee needs to go back and add how many hours they worked on the project, and that gets invoiced by hour, right? Or it could be other situations where you want to use an invoice. The reason invoices are difficult is that you need to be able to match the invoice with the payment. And you need to do that, especially if you're using accounting software. Again, this is where a huge mistake can happen. And it's no one's fault, but the fact that invoices are complicated. So when you receive payments and you're using invoices, you need to match them together. So I got $1,000 in, that was for invoice 201. Put those together. And the reason you want to do that is so that you know what has been paid, number one, and what's outstanding, right? So if you match them, you'll know, I have these 3 invoices, they haven't been paid. They were from 2 months ago. I need to contact them and see if they know there's an outstanding invoice. When are they planning to send the money, right? You'll know that you're missing payments that way. Another reason why you want to match them is because you want a clear understanding of where your business is at that time. So for instance, you can say, if you were going for, I'm going to jump down to the third, where it's understanding your accounts receivable. The other reason why you want to match your invoice with your payment is that way, if you go and talk to Caroline about a loan, and you're like, well, here's how much money my business has right now. Here's where we're at. This is where our business looks like. Here are our financials. But then you can also say, however, I have this number in receivables. I have this number in outstanding invoices. That's your receivable right there. And I'm expecting to receive that in 30 days. So it adds to your picture. It adds to your full business picture what is outstanding. And just so you know, you're not recognizing, going back to the middle bullet because I jumped, what we're trying to say there is that you don't, as a business, when you're using invoices, you don't recognize it until you receive payment, right? And so that's why it's a receivable. So you can share that as money that is coming in, but it's not in, right? You have not received that revenue until you get paid. For sales receipts, that is more where you're at. You can only say, this is where my business is at today. You can't look towards the future because they're all sales on the spot. So you can say, I plan to attend these 3 pop-ups and I expect to make blank, but it's not in your books. It's nowhere in there that you're gonna make that money versus an invoice. You've invoiced and you're expecting that money to come in. If they don't pay you, that's a different story. We can't control that. But really it's all about what's best for your business. But those are kind of some key things that you need to remember, and that will help prevent any errors for the future. And I think we're back to our big question slide. Any questions over the first half or more than the first half? Do you want to take a 5-minute break? This is where we would plan it.
Does anyone want to take a break, or do we want to just keep going?
Okay.
Okay. All right.
All right.
Let's roll.
Let's roll. Like we can go. All right, I'm gonna switch it back to Caroline. Oh, there's that last one, sorry. Close that.
I feel like being a white one up here.
Yeah. I kind of want to stand up there, honestly,
Yeah.
as opposed to, but
Oh, it's feeling cocky now. Those of you remote cannot see, we have a screen on our wall that's like touch screen. So that's what we're talking about. Okay, so next we're going to talk about receipts. Receipts, we all get receipts. All of our business expenses start with receipts. We don't always keep our receipts or even take our receipts now, which in my personal life is a great option. It keeps my purse a lot cleaner. But if I need to track detail on the receipts, I actually need that receipt so that I have the information. So we're going to take some time to understand our expenses and how we track our expenses for our business. There's a number of ways that you can track your expenses, just like Malisa was talking about how we track our revenue, how we break things down. We do the same thing with our expense categories. What we want to keep track of. Do we want to know how much our employees are spending on gas? Do we want to know how much we're spending on a specific product? Do we want to know the sky's the limit, right? Whatever important categories are in your business, you may want to track so that you can keep tabs on that. How much are we spending entertaining customers, right? Building a business, building customers is really important. But if you're spending a lot more than you realize, you need to determine if those relationships are worth it. How much are you spending going out to eat? So you can track things in a number of different ways. And the cool thing about having data is you can track at like a higher level. And then if you need to break it down, you can always dive into that data and find out more information. The other reason we want to track expenses is for taxes. Whether we love it or not, taxes are just a part of doing business. And we have to tell the IRS how much our business is making and how much our business is spending. Most businesses start, at least the ones that we work with, as sole proprietors or as LLCs. And so oftentimes you're reporting your sales and your expenses on your personal tax return. So on the 1040, on the Schedule C. This section here is an image of the expense section. And so this is a great way for you to start tracking your expenses. These are all the numbers you're going to need to provide to the IRS when you do your taxes. So if you start tracking your expenses in the same way, you will be able to do your taxes much easier because you already have the data broken down how you need it for that. Corporations track, the categories available on the corporate tax return is a little different, somewhat similar. We don't see corporations as much in like the small business space, but if you do have a different type of entity, take a look at the tax form for your entity and you'll see how things are broken down that way. If you go back to, I've got a mouse on here, no. If you look at the expense category on the right side, 27A is an option for other expenses. So lines 8 through 26 our more common expense categories, but you have the option to include other expenses. And so on this side, we have a list of other expenses that fall into that other category. The IRS tax form always has a whole section. Like if you look on the IRS website, there's a whole section that breaks down what the different fields mean, what can be included in that. So if you're doing your own taxes, you can always look at that data to learn what can be included, or you can talk to your accountant, your CPA, who's ever helping you with your taxes. A lot of what we've talked about today falls into this category: bank charges, credit card charges, fees for accounting, things along those lines. So you also want to be keeping track of that, because that is an expense to your business. That's the cost of doing business, is what we pay to operate in this world. So let's take a minute to think about some of your expense categories. Do you typically track, if you're currently tracking your expenses, is anyone using the IRS form? Is there a different way you're using it? Do you have some wisdom, something that works well for you that you'd like to share? All right. So this is a larger snapshot of the Schedule C. So you see the top of this section is our income and the bottom is the expense section. And then at the very bottom is our profit. So if we think back to one of the first slides, when we talk about profit, revenue or income, so part one minus expenses, part two is our tentative profit or loss, right? That's the equation that we use to determine if we're profitable. So this gives you an idea of the things that you may want to track, that you may want to keep track of. If we have this data handy, it's really easy to do our taxes. If we have to put it together, if we have to pull it together, it's a lot harder and it's a lot more daunting. I do want to share, in the lending space that I work in, we talk to businesses all the time. And one of the first questions we ask is, are you profitable or not? There are different strategies to running a business. The IRS allows us to write off expenses, right? If you're using your home, you can write off a portion of your home. So what this does is it increasing our expenses, right, decreases the profit of the business. And our taxes are based on how much we're making. There's a lot of conversation in the world about reducing your tax liability, right? That's less money that we have to pay to the IRS. And while that's great, because that's less money we pay to the IRS, it also makes our business look not as profitable. So if you're wanting to take out a loan, if you're wanting to bring on an investor, if you're wanting to sell your business one day, honestly, you want your business to look as profitable as possible. We want to be reporting all of our sales. Sometimes we'll see businesses that report only their card sales. They're not reporting the cash. That is going to hurt your business. So whatever choices you choose to make for your business, think through those choices. If you're solely focused on reducing your tax liability, know the offset of that, may affect you in somewhere else in life. So my suggestion for you is make your business look as profitable as it actually is. All right, so when we look at the income section, right, we start with gross receipt or sales. So that's how much, that's line one, that's how much money we made for our services. If we go down to line 4, that's cost of goods sold. So cost of goods sold, or COGS, as you may hear it, it's another section of the financial statement. Not all businesses track COGS, but you can. Some industries, it's more helpful to track COGS, but you can choose to track it if you want or not. COGS tells us, let me go back to this. If we look at our income, right? So the way this equation works, you can't see the pluses and minuses here. You take line 1, you subtract any returns from it. That gives us line 3, right? So that's our net sales. Then you subtract your cost of goods sold. So COGS is what it costs you to create that product. So you subtract COGS from your sales, and that gives you your gross profit. So if I'm selling t-shirts and it costs me, I sell a t-shirt for $10, it costs me $5 to purchase the t-shirt, for the ink, for the embroidery thread. That means I am profiting $5. And then the rest of my business expenses come out of that $5. So this is a reason why we may want to track COGS, is to help us understand what we are actually making on our products. We want to, assuming we've started our businesses for a reason, we probably want to be profitable. We probably want to maximize profit if possible. And so we also want to make sure that the products we're offering the community are making the money we think them to be making. Another example is if you're a restaurant, you may want to track your food vendors, how much you're paying for drinks, right? You're selling, you're making $10,000 in sales. How much did it cost you to actually make that sales, right? Subtract out all those things. So any business can do that. Sometimes we see COGS tracked on the financial statements. Sometimes it's just written into the expenses. You can choose what you want to do for your business, but it can be really helpful to break things down so you can actually evaluate your different lines of business. Oh, there you go. I'm getting ahead of myself. Yep. So COGS can be really helpful. Even here at CIC, we're more a service-oriented business. We have a couple different business lines, and on our financial, like on the backside of our financials, right, on our tax return, it's just the amount we make, the amount we spend, but we actually track it by program. So how much money is lending making? How much is homeownership making? How much is our education department making? What does it cost to run each of those departments? And then admin, so our overhead, how much, what are we paying in wages for our admin? How much does it cost for our building? All of those things are separate. Our programs are using them, but it's not tied to a direct sale. So all those have to balance out. So it just helps us overall in making decisions. Oh, you also could add wages to these if you wanted. So COGS, if you have an employee, say, who their only job is to print t-shirts, then you could add their salary to your COGS for the t-shirt company, because that is part of the cost to produce that t-shirt. They're not managing people. They're not working on the admin side. They're just operating for that. So you can decide what fits into it based on your specific business model. Any questions on COGS? All right. Oh, this is Melissa. Oh, here's where the fun begins.
Yeah.
Okay.
I was just curious. Yeah. Okay. All right. So we've done a lot of talking about what you should do. And so we're going to focus a little bit, because we said, have a separate bank account, have a separate credit card for your business. And so now we're going to tell you how that's helpful. We're going to show you how to use that separate account or credit card, and how that report is going to help you. So I'm sure a bunch of you know, you can pull a report from your credit card. So you can log into your credit card company and you can pull a report. And once you pull that report, it'll download as a CSV. I'm trying to find my mouse, sorry. It'll download into a CSV file. And then from there, you can open it into Excel or Google Sheets. Now, how often you do what I'm going to do is completely up to you, and it depends on how much activity you have. So if you have a lot of activity, you might want to do this within a week, every week, right? Every Friday you do this, or every Sunday night. If you don't have that much time, or you just don't want to do it that often, I would highly advise that you do this at least once a month, just so that your memory is correct and you know what everything is. So I need to share this, but I think I need to stop share. I think I need to update. 1 second. Okay, there it is. All right, so here is a sample download from my business credit card, right? And so yours might look a little different. None of them are completely the same, but what you're gonna have for sure is you're gonna have a transaction date column. You're gonna have when it posted. So that's when you should see it on your credit cards. And then they give you a description, right? That's usually the store or wherever comes up with it. And then the credit card company gives you a category, right? Well, they don't know, right? They're just categorizing the store. So really not super helpful for us. Definitely would not look at that. And then the type is like, was it a sale, a return, what's going on there? And then the amount is on the last column. So what you're going to do at least once a month is you're going to add an expense column. And you're going to go through each item and you're going to label it as what it is based on the expense items that Caroline shared on the 1040 Schedule C. So that way everything is in the same category, right? Now, some of these are very direct and some of these can be unsure. For instance, Walmart. What did you get at Walmart at the beginning of the month? And this is where I mean, you don't want to wait 6 months to do this because you probably aren't going to remember and you may not have that receipt, right? So if you have the receipt, great, go look at it. What did you buy? Did you buy food did you buy meals? Was that your expense? Did you buy supplies at Walmart? What did you buy? What was the expense there? Or did you just buy yourself personal items where, oops, I used the wrong credit card. This is a personal item. I shouldn't include this in my books. And if that's the case, you're going to write out, just going to say, this is personal. And then you're going to know that you need to remove that from your books, right? You need to categorize that. Maybe you're going to use that as an owner's draw just to make it easier, right? So let's say for this Walmart one, we did supplies. Just guessing. Chado Vida was meals. Trader Joe's, we're going to say was meals also. Fry's fuel. So that one's pretty, helps you because it says fuel. And so gas, you're going to say car. That was a car expense. Staples, let's say it was supplies. UPS, that's going to be, I gotta look because I don't have that memorized either. I think that's going to be postage. Yeah, postage is what they're using on the tax returns. Again, meals for Blanco. Now Walmart, we're back at Walmart. And you'll notice that this is a return, right? So that means you return something. Let's assume when you look at your receipts that this return had to do with your purchase at the beginning of the month. Okay, you made a purchase for $95 in supplies, but then you returned $55 of that. Okay, so, and this should be, sorry, that should be a negative. So you returned $55 of that. What you need to make sure you do is if it's from that same purchase, you need to return that to supplies. You need to use the same account. Okay. It should be an in and out. So that way, when you look at your supplies category, you know that you didn't spend $95 on supplies. Instead, you spent $40 on supplies, right? So, and I'm showing that the sum is showing down here on the bottom right. I don't know if you can see that. It's really small, but it's showing the sum of those two cells is $40. So really you spent $40 on oh my, that was weird. I apologize. Sometimes we have like this tech wizard, anyhow, somebody pops in and messes with our computer. So, that'll reduce the amount you spent on supplies. So it's important to do that. If it was a different Walmart purchase where you did meals instead, then it should come from meals. So really you just got to make sure you know what accounts you're doing. And this was easy because this is all in the same month. So if things cross over from one month to the other, then you may have to go back and look at your August report and see, where did I put that Walmart purchase? What was that? Go back and look at that receipt, or go back and look at your report from August and see what you did and then update this one. And then again, we're just going to keep going. So Circle K was gas, cars, Farmers Insurance is insurance, car again for Fry's, Walmart, this time we're gonna say we did meals. Another insurance, Chili's meals, QT gas car, automotive for Honda, you serviced your car, that's also car. And then UPS, also we're just gonna say it's postage. Okay, so now you've gone line by line, and you know, this is a simple month credit card statement. It was easy because everything had to do with the business. There was no crossover. There's less activity that way. And so once we do that, then, and again, I don't know everyone's familiarity with Excel or Google Sheets, so I'm just going to kind of talk us through this. If you're, you know, if you know how to use Excel very well, then, you know, you can roll your eyes. I won't see them. If you don't know how to use Excel, then hopefully this is helpful. So what I want to do is I want to resort my data based on the expense that I just labeled it as. So you can either highlight all of your data, and then what you're going to do is you're going to go over here to the right where it says sort and filter, and you're going to click on that. There it is. And then I'm going to go to custom sort. I want to make sure this is clicked because it says my data has headers. Yes, it does. So I want to make sure that's clicked. When it's clicked and you go to the sort by dropdown, it'll have your headers listed here. If you don't have that clicked, it's just going to give you your column name, like A, B, C, D. And that's fine, but I don't like that. So data headers makes it just a little bit easier. I want to sort by expense. So I'm going to do that, and I'm going to press OK. So now you can see that everything has been resorted by the expense tag. The reason you want to do that is because now you can go back and do a total for each expense. So you can put that equation wherever you want, but I'm going to equal a sum equation. So equals, and I want it to add, so I'm going to type the word sum. You're going to open your parentheses, and then you're going to highlight the cells that you want it to add. And then you got to close the parentheses. And that's just an Excel thing, open and close. So what are you adding? And then press enter. So you can see that for your car, the expense was $347.03. That's how much you spent on your car for your business, right? And then you can do the same for each. You can do it for insurance, and you can do it for meals, because, you know, it seems like this business likes to entertain their clients or prospective investors. And so they spent $122 on meals. So it's good to kind of see how much am I spending on each category. Here's where Caroline was saying your supplies. If these were all to make your item, then that would be your COGS, right? And then if you're going to separate, because some are for t-shirts and some were for pants, then obviously that would be you'd have to separate that for your COGS. But again, what do you need to know? Do you need that separated right now, or you just want to compare apparel to jewelry? Then maybe you don't need that detail yet, but you do need to know what you're putting into it. And so you can set it up as a COG, or you can set it up as an expense on the Schedule C. So whichever way you want to do that. So that's kind of your little Excel demonstration there. Any questions on this? Okay, again, so I would advise you do this at least once a month, just because it's easy to forget what everything was. So now I'm going to go back to our PowerPoint. Okay, and I'm just going to kind of summarize here. So on the fourth line, it does say that you can also import from an accounting software into your, you can import this spreadsheet into your accounting software. But again, I would advise be careful with that, because if things aren't set up properly, then it's going to put things in different accounts or the wrong account, and then your financials will not be correct. Okay, so on the same note, when you have your bank account, and let's say you do have one bank account for your business transactions, okay, here's a sample bank account download. You can go onto your bank account, you can download the activity for the entire month, right? Or you can do it every week. Again, whatever works best for you, as long as you will know what everything is. So when you're looking at your bank activity, again, you want to categorize everything. You'll add an expense column and you'll do what we just did. So for instance, telephone, you'll put that under phone. Under Denny's, you'll put meals. Circle K probably was gas for $63, so you'll put car. You're going to do the same things. What's different on your bank activity are a few things. The first are these deposits in yellow, which hopefully you can see the difference online. So the deposits in yellow are you making a deposit, right? So maybe you got cash for an event, right? Or the 2,100 seems sort of high. So maybe that was somebody making an investment into your business. Maybe your friend or your parents want to help you, right? So they're making an investment. So you need to identify what those are, okay? So that way you know how to enter those in the books, or you can tell your accountant how to enter those. Another important one is what Caroline was talking about earlier, and that's the two bottom blue or all blue rows. Those are all transfers. So again, the bottom two is money coming in, and that's not revenue. That's not a sale. That's you moving money from one account into your business account. And that needs to be entered as an owner's contribution, right? Because you're transferring money in. And then, you must have done well somewhere, because on the 1st of September, you did an owner's draw. You transferred money from the business back into your account. And so you paid yourself $1,000. You're doing an owner's draw. So that's kind of how that will look there. The line in green is going back to those payment processing that you have, right? And so on the 13th of September, we have an A stage credit from Square. And I just kind of made it small. It actually comes out with a lot more, but Square is in there. So you know it came from Square. Okay. And you got $231.50. Again, that is not all revenue, right? So you might have made $240 from that, right? But maybe the item was $235 and then you had tax on there, or a delivery fee was added to that. And then Square subtracted their fee from that, making it $231.50. So you're going to have to pull a report from Square. You're going to have to go to your Square account. And this is where you need to figure out where to pull that report and how do you manipulate the report to help you. So that way you can look at all of the Square transactions, because the fact that there's only one, it's pretty simplistic. Okay. You're probably going to have multiple Square deposits, and you should. And the reason why you should is you should make a Square deposit after each event. So if you go to 3 different pop-ups or 3 different farmers markets, you should do a Square deposit from each one. Okay, so that way when you're seeing it on your bank, you can say, okay, this deposit was from this farmer's market. This deposit was from this pop-up. And the reason why you want to do that is so that you can see how much did I make at that one event. Once I subtract everything, right, and add everything in, maybe I shouldn't go to farmers markets. I really didn't make that much there. I made more at the pop-up, or I make more money when I go to this farmers market versus the other one. So it is good to kind of keep things like that. If you do one deposit a month, then you are going to have to rely on the Square report, and you're going to have to do more detail. You're going to have to break it up. You're going to have to break up. If it was a Square deposit of $1,000, you're going to have to break it up into where that all came from in your books. So again, your bank activity is a summary of everything, and you really need to break it down into the details that will match your books and will match what you want to get out of it. And if there are no questions, I'll leave it for Caroline to
All right.
tie it together.
Now we're going to tie it together. So we want to do what Melissa just went through. We want to do this for every account that we have, our bank accounts, our credit card, our merchant service accounts, right? Everything. We want to get that information from everything. As Melissa said, we showed you a basic Excel formula. Excel is an incredibly powerful tool, and it can make your life really easy when you learn how to use it. But as with anything, right, it's baby steps. So if you are not familiar with Excel, the basic formula we showed you will get you going. But once you're comfortable with that, like, you can easily automate some of these things. So what we want to do is pull together all of the information so that we have those numbers, right? We have that, how much we spent in supplies from across all of our platforms, right? Like, what is that overall number? Not just what's in my bank account, but what did I spend here? What did I make there? However you want to keep track of that. If you want to keep a separate, Excel sheet where you add all those numbers together and you have everything laid out for every single month, you can do it that way. So once we have all of our information, we can put together our financial statements. And okay, I work in this space and I love these things, so you probably don't think they're as cool as I do, but financial statements are really cool. It gives us a picture of how we're doing, and we can make decisions. Numbers, information is powerful. It can tell us a lot. So the first thing we want to do is take a look at our balance sheet. So balance sheet is it's our assets. So what we own, things that we own, our bank accounts, fixed assets. So, there's a lot of things that can fall into assets, right? And this is what the business owns, not what you as the owner owns. Sometimes we see these commingled when we're looking at financial statements. I realize you own your business, but you need to be able to separate out what assets are yours personally and what assets belong to the business. What did you personally buy and give to the business? So that would be asset by contribution. Or what did the business buy with its own money? So that all would go on your balance sheet as an asset. Liabilities, this is what you owe. Money you owe to other people. So credit cards, do you have credit cards? Do you have loans? Do you owe, when we talk about invoices, right? Do you owe other companies money? Did someone send you an invoice and you still haven't paid it? Those are all, that would be an accounts receivable. Just kidding, payable. Don't listen to me.
Don't worry, you're good.
I'm fixing my payables and my receivables right now. And then the final piece is equity. So what is your ownership in the business? So we take the assets that the business owns. Say the business has $10,000 of cash and assets, property. There's $5,000 in loan balances that you owe. So your equity is $5,000. So if you were to close down the business today and walk away, you'd have $5,000 in your pocket. So that's our equity. The financial statements all work together. Each one tells us a little different picture. So when someone says to you, can I have your financials? Typically they're talking about all of these statements together. Our balance sheet is a snapshot in time. So this is not over a period of time. This is whenever you create it. So oftentimes we create financial statements at the end of the month for every month. So our financial statements tell us how we did in that specific month at the end of the year, whatever period you are preparing financial statements on. So this would be your balance sheet. So on the left side, we have our assets. So as we saw on the other screen, right? Breaks in all the different categories. We have templates of these, which we'll send to you. And you can change the categories to match however you want to break things down. In the accounting world, current assets refers to things that are cash or can be converted to cash quickly, typically in like 12 months. Yeah. Fixed assets, it's not on here. I'm going too far, but I already started. Long-term assets are things that take longer to convert to cash. So it's not on here, but you may see that on like a more traditional financial statement. And then we have our fixed assets. All right, thanks for coming, Rosie. We'll be sure to send you the recording afterwards so you can finish. So our fixed assets are the things that we own. And then on the right side, we have our liabilities. So you can break down all the different categories. Same thing, current liabilities and long-term liabilities. So current liabilities is the amount of money that you owe within the next 12 months. So if you have a loan of 5-year loan, how much of it do I have to pay in the next year? And then long-term liabilities would be what is owed over the next 4 years. This helps you manage your cash flow because when you look at that current liabilities, it tells you, okay, in the next 12 months, I have $3,000 worth of payments I need to make. Longer term, I have $7,000 worth of loans that are going to need to be paid in the years going forward. And then same thing, owner's equity. It's just the equation, assets minus liabilities equals owner's equity. So this is your balance sheet. You can prepare this at whatever frequency you'd like. I like to compare things. So I want to look over time how I've done, what's changed. It may be here, the only thing that's changing is your bank balance or your credit card payment. So maybe you don't need to update this all the time, but you definitely want to know what you own. You want to have a record of this somewhere. The next financial statement is a profit and loss statement. This really ties back to what we've been talking about today. So when we review all of our account data and we have all the numbers of our revenue, of our COGS, of our expenses, we can input it on this profit and loss statement. Again, we'll send you a copy of this spreadsheet as well so that you can create your own profit and loss statement. You can, on the top, on the revenue streams, you can break down your sales however you want. Whatever works for you, that's what goes in there. If you want to just track everything as a whole, you can have one line item. And to start, we recommend starting simple. If you haven't been keeping track of this, maybe it's easier right now just to start with lump sum revenue, right? Lump sum expenses even. Once you start getting into that habit, then you can start breaking down and adding in the detail. But this is a great way to break down and to see over time how you're doing. What happened in that month to cause you, why did you lose money? Why did you make money? Why is this so different from other months? When we started a new business line, do we see our revenue increasing? What happened? And then as we have history over periods of time, you can start to identify trends. Year over year, you can see maybe every summer my sales drop. We're in Tucson. What line of business are you in, right? Is there seasonality? When can you expect to make the most money? So this is what I talk about. This is why I get excited about data, is because it tells us a lot about what's going on when we have enough of it. It might not seem as exciting in the beginning when you're tracking because you can't really do a lot with the data, but once you have enough of it, it can be pretty cool. So this is your profit and loss statement or your income statement. And do you ever hear people say, like, what's your bottom line? What they're referring to is the bottom line of the profit and loss statement. The very bottom line, right? How much are you making? What's your net income, net profit, net earnings? Are you profitable, right? Those are all sayings that are used interchangeably, but that's what they're wanting to know, is what is the bottom line of your business. So a couple more slides for you, and then we will open it up for any questions. So we have just a list of some general tasks for clean books. So things you want to do: monitor your bank balance on a daily basis or regular basis. Definitely review it. Reconcile your bank and your credit cards monthly. If you're writing checks, right? If we're using cards, things come out pretty quickly, but if we're writing checks, we definitely want to make sure that those checks are clearing. I don't do bank statements still have the reconciliation thing on the back?
It'll tell you which checks have not cleared also, I think.
Okay.
But
yeah, I don't know, back in the day, the back of the bank statements used to give you a formula for how to reconcile your account. I don't know if they do anymore because
I think they do. I see what you're saying. They do.
Yeah.
It's like
so
the third page or something.
If you've never flipped over your bank statement, flip over your bank statement and see how you reconcile your account.
And if you don't get them by mail, if you go into your bank account and download it, you can download the statement and then it'll probably be there.
Okay.
I'm just saying, because a lot of people don't get their statements in mail.
Yeah.
They go paperless.
Yeah. So we want to keep in mind if we have outstanding checks. We used to be more conditioned to keep track of this, but now that everything's electronic, like you write a check and you assume it's going to clear, but if someone holds it for 3 days or 3 weeks or 3 months, when that check clears, you want to make sure you have the money in your account. Closeout sales monthly. Identify and classify expenses. Anything we can do on a regular basis is going to make our life easier. Know what's outstanding at the end of the month, right? So not only like what checks haven't cleared, but what bills do you still need to pay? What income have you not received? Just get a sense on where you're at and what needs to happen. If you have vendors, maintain your database, collect W-9s, understand your contribution and your draws. How much are you putting into your business? How much are you taking out? If you're having to contribute a lot of your own money, right? If the business is not making money on its own, that's important to know. When businesses start, we typically aren't profitable right off the bat, but how long are you comfortable with that? What's your overall goal? And so we just need to know that. Whatever your answer is totally okay, but it's important for us to know. And then if you do have employees, you want to make sure that you're maintaining your payroll, you're paying your taxes, payroll taxes, sales taxes, IRS taxes. If you are required to pay taxes, I just would urge you to stay on top of those. They can get out of hand and are very expensive after the fact and kind of stop you from doing a lot of things as well. So definitely important to understand taxes. And then let's see, okay. So this is a list of items that we've talked about today. So this would be a good checklist to go through and just make sure that you have these things taken care of. So do you have an account in the name of your business? As Melissa was saying, if your business is new, if you're in the early stages, having 2 personal accounts is fine. But once you have a registered entity, as your business is growing, you want to make sure that you have an account actually in that name. If you're looking for a loan, you have to have an account in that actual name of your business. Separate credit card, want to know how to access all of your reports. So how to pull down that data, what reports are available. You want to monitor everything. Reconcile, let's see, spend some time thinking about your revenue and your COGS. How do you want to track things? Like what information do you want to know about your business? You can identify key expenses. And we would suggest that you follow a monthly process so that you have a clear understanding of what's going on. Consistency is really important. We want to create patterns and repetition. Create, documents to track whatever you need to your owner contributions. We've talked some about accounting software. I know that it will make our lives a lot easier. It also can be pretty daunting to set up. I think the hardest part with it is setting it up. So once you have it set up, it can be easier to manage. We do have a connection through the Arizona Commerce Authority. They have some different programs to support businesses, and one is through QuickBooks setup. So if you don't use accounting software and you would like to, let me know and I can connect you with the organization and to get you some help setting up QuickBooks. And then last, I just want to leave you with this reminder. Systems create efficiency. Efficiency creates margins. Margins create growth, right? And growth equals you achieving your goals. So looking at your finances on a regular basis, whatever systems you need can be a little bit hard to get going because there's a learning curve. But once you have that system in place, if you know every Monday from 8 to 9, I'm going to sit down and review my books and categorize transactions. Over time, that's going to compound and you're going to get much faster at it and it's going to be a lot easier. And that will just help your business overall. If you have questions, if you'd like to have a one-on-one, we would be happy to meet with you and talk about your specific situation. I know that, things seem easy when we're looking at them, but when you go to sit down and do it, it's not always as easy. So happy to have a one-off and work with you through this. For those of you who have a connection with CIC, here's contact information for both Iracema and Brandy. They can help with this directly. You'll have my email as well. So just reach out and let us know how we can support you. We thank you for joining us today, and we hope you have a really great day.